Tyrone Abella from FX Evolution is joining us with the charts that matter to him this week. Tyrone, always love having you on the program. Look, so much going on. You would think there would have been some kind of flight to safety when it comes to the US dollar, given the crisis that we are seeing in Ukraine, the expectations from the Fed. But what are we seeing when it comes to the US dollar and the greenback?
Hi, Cara. Yeah, it's been a bit of a crazy week, hasn't it? But I think a lot of the craziness actually probably really displayed its presence last week. And I think this week the market's charts really have probably steadied up a little bit and given us a bit of an ability to trade. The dollar index is really starting to strengthen now. We can see it break some very key levels. And yeah, look, it's one of those things where you have to go back a long way to actually see where the real resistance is now for it. But it's broken a very, very key short-term resistance now. And you'd think that if it keeps tracking up, especially if we see a strong close above this level this week, you'd think next week would be right on track to get up to around that 98 level again. So very, very strong.
But where is the trade here when it comes to FX markets? The euro very much dominating when it comes to that dollar index product. I mean, trading euro USD, how are we looking at the moment?
The euro USD is just a perfect trade for the dollar index, or the inverse of that actually, because the euro USD represents the best trading opportunities because it's actually the cheapest and the most efficient way to actually trade. But the good thing about what we see with the euro is it actually gives us opportunities to get in. A lot of people look at the market and they say, well, we've seen the big move now. How do we even get in that? But the euro USD really shows here. I've got these two pink arrows pointing to two very logical places that you could have entered this trade, all on the back of the warning signals that you got from the dollar index. Once that displayed that it was actually going to hold on at its strength, this one broke a very key support level, and this is a 4-hour chart that we're seeing here. But both of those candles represent excellent entry opportunities. Technical analysis 101, really. That 20 moving average, the red line, is a very, very good point to actually play the game on the short. And you can see a series of lower highs and lower lows on this particular chart gave us very, very good entry points, and the 110.50 level was just a very logical zone for it to go. So a lot of it made it very easy to trade, I think, and the dollar index gave us all the clues for it.
Would you make a big enough call to say that it might go down to parity?
Wow, that's a big call. No, I don't know. I'm not so sure about that. Well, certainly not in the first instance, but look, 110 was a very logical zone for it. And although it looked very unrealistic when it was up around the 116, 117 level, it certainly worked its way down here. Now, crisis or not, it was probably heading down here anyway, because realistically, technicals are technicals. And sometimes a black swan event can cause a big movement in the market, but this is far from unexpected. So realistically, the 110 is a very strong zone, but it's got a long way to go to get to the parity, but I think that we can find hopefully some support around this 110 and give us some trading opportunities back up to the key moving averages.